All right, what up, everybody? Chris Franks with Texas West Capital. In the wings, of course, I have our two other favorites, Andrew and Tillman. And we are going to say things that you're going to love, and we're going to say things that you hate. And it's all going to have to do with Bitcoin. And the goal, as always, with the show is to get you to think, and hopefully to get yourself positioned well for whatever may come with Bitcoin here in the future, right? We don't tend to focus too much on price. It's really about all those other things and what Bitcoin really means and what it means within the system and whatnot. Before we get going here, make sure you hit the thumbs up, hit the like, hit the subscribe, hit the follow. We're here all across, social media, multiple different platforms we're streaming across right now. Follow us. You can follow me at TX West Capital. You can follow Andrew at AP_Abacus and Tillman at TXOL. Texas OL 61. There we go. He's laughing in the background. I'm going to bring these guys up. See, look at this. He couldn't even get the laughing done before I brought him up here. I don't know why I continue to struggle with your app, but man,
I know why. Listen, don't pretend. Haters going to hate. You're a Texas Tech guy. I'm a Longhorn. There's just this undertone subconsciously that you have to take digs at the greatest university in the country, especially in the state of Texas. Go Longhorns.
Maybe. I think we'll have to take a poll here, and everybody agrees you're going to have to change your ad, okay? Why don't we just do it with something like
Listen, anyone who listen, I've told it to you 50. I've told it to you 50 times. I've had it for 30 years. I can't change it. It's Texas OL, like offensive line, and then my number 61. So like with a simple Google search, you could pretty much figure this out, unless you're Chris Inks. And in that case, you need to bring in support like he has in this show. I'm here to help. Listen, if you need me to get after the show and do a private session on how to find me, I'll help you. It's not that hard.
And this is exactly why things that happen before the show don't actually happen during the show, Mr. Holloway. All right. You had your little complaint earlier there. Now you see
everyone knows who's winning because you have to fight dirty by cutting my mic off sometimes and taking cheap shots.
That was Andrew last time, man. That was Andrew, and it was because you were going into the whole life thing. So. Hey, if you're watching us and you're new, welcome. This is what we do. We have a little bit of fun, guys. Life's too serious. All three of us, we run serious companies. We're serious throughout our days. And so this is where we have a little bit of fun, but we also provide some info, right? So let's get going with it. First thing, Bitcoin. Everybody was waiting for that all-time high yesterday. And we didn't get it in spot. We became like within $100 or so of it. But we did get it with the futures. And so those that don't know, when your futures price, your futures contracts price are above your spot price, it's something called contango. And what that means is that the market participants, your traders, your investors, are basically expecting spot price to continue higher. So if you got scared because it didn't make the new all-time high, well, there's a little something maybe to get you, in the mood and not freak out too much, right? Even if we get a bit more of a pullback here. How are you guys feeling? Were you watching it yesterday as we were nearing it? Were you guys sitting there glued to your screens?
I was watching it for sure. Got all the alerts that go off when it approaches the all-time high. I think everybody's waiting for the same thing, which is that, price discovery candle that skyrockets. Some people say 10,000. Some people say it'll shoot us to 100K. I don't know what it'll do, but it is. I mean, if you've ever been in a stock or anything that has price discovery moments, I mean, it can become exceptionally volatile to the upside because there is no territory to mark the value against. So it has to find that value. And typically that takes time and it takes a lot of price movement. And so it's exciting. I think everybody was watching the same thing, but I think it's more exciting that we were watching two different prices of Bitcoin. That's what we've been talking about. And it's only going to get more. Every single derivative is going to have a disjointed price, and even cold storage at some point will have a disjointed price. But we saw it yesterday. Some people were buying Bitcoin at a speculative price through a on-chain solution that drove the price up beyond the spot. That's encouraging. That's awesome. That means lots of
To
people are
me,
betting on it in
the
lots of
bigger
ways.
deal beyond the, reaching for the all-time high, the bigger deal is the fact that post the run-up yesterday, I mean, we've basically settled into a range, right? We've already settled into a little bit of a range. And that range isn't an immediate 10% drop to the downside. It's not even close, right? It's a 3.5% move, a little bit to the downside. Then the movements tighten, and we're sitting at 72, 71.8, 72. To me, the move is two things. I mentioned it in a post yesterday. Not two things. I think it's three things. Volume always precedes price. So in the way that we saw huge volumes running into January, February, March, when the Bitcoin ETFs came online, you had massive inflows in the first 3 months. And you had a huge move in Bitcoin from the high 20s up to the high 40s into the 50s, right?
Yeah.
And same thing has happened over the past month. You've seen another massive uptick in inflows to the tune of nearly 4 billion in the last 4 weeks. 3 billion of it coming really in the last 2 weeks. And so there's your volume, which precedes price movement. And, you've got BlackRock's product over 30 billion, I think now in total AUM. You have the totality of the Bitcoin ETFs are effectively about 100, 1.1, not 1.1, I'm trying to say this right, but about 110,000 Bitcoin away from Satoshi's wallet. They're about to crest the million BTC mark for all of the ETFs put together, just in a 10-month period. That's nobody predicted that. Nobody came anywhere close to predicting that. We're going to see BlackRock's IBIT product move into second position behind Satoshi's wallet probably in the next 3 months. BlackRock alone. That's not to say the whole entire class.
And let's not gloss over this. You just kind of said, 30 billion assets under management. We're talking about the absolute fastest growing ETF in history. Well above JEPI, JEPI, which was Morgan's 1,270 somewhat days. Well ahead of GLD, which, was thousands of days. We're talking about 293 days to secure over 30 billion with a B assets under management. I mean, it's crazy.
It just tells you.
Go ahead.
It just tells you to me that if you look at Bitcoin's history, it's always been pretty unapproachable. It's been difficult to deal with. This has taken all of that away, and it's allowed big money to start using it. And like we've been saying on the show every week, at the end of the day, they're going to rule the roost. They're going to own the majority of Bitcoin on the planet. They will control the market because they will build derivative products off of this market to infinity, because they don't care if they own the majority of Bitcoin and they're holding that Bitcoin in custody. They wield the biggest sword in the room. Therefore, they get to create and control those derivative markets as they are created. They are the inception of it. It's very interesting also to think about the new stock exchange that's being propped up in Texas and how this could tie into that. I mean, you're talking about, and I will say this, I think the market is pricing in Trump winning. I do think that feels, if you look at even most of the liberal media, they're even kind of going, we're in trouble. Look at these poll numbers. And so when you have the vast majority of the U.S. kind of feeling like it might happen, I think, the crypto scene is obviously a place where Trump feels pretty comfortable at this point. And so it's going to be a pro-crypto administration for sure.
When people like Ken Griffin come out from Citadel and says, it looks like we're going to have a Trump presidency. And he goes on record saying those things. People in those types of positions aren't in the business of making predictions, right? They're more so forecasters than they are predictors, right? He's not going to look at a 50-50 proposition and say, well, I think I'll throw out this quote today, right? Just because I'm bored. That's not what a Ken Griffin does. So, I think it's a forecast, and it'll be interesting to see what the short-term fallout is of election results, which, by the way, I mean, that's next week, right?
Yeah.
That's
here.
Crazy. Time stops for no man. So it'll be interesting what the short-term fallout is. If I remember back in 2016, when it was announced that Trump had won the presidency, in the immediate aftermath, I remember the futures just absolutely puked, right? Mm-hmm. But then within a 2-hour period, and then the next day when it opened, all that puke had gone away. Like it limit down when it was announced he was president, but then it came all the way back. So yeah, it's gonna be interesting stuff. I will say that we're getting to a spot much faster than we thought that we would, of having BlackRock be the second largest quote unquote Bitcoin wallet on the planet. That statement is truly, it's like, okay, what do we do with this statement, right? There's lots of good and there's lots of oh no what ifs, right?
It should tell you how small. But it should also tell you how small this market is, right? And this is what we've been talking about for a very long time. It's like, to graduate to the big boy table, you have to get a lot more liquidity than the Bitcoin market cap provides right now. Like, that's not a big enough pool for the hippos to go play in. And so this is just a natural. What's exciting to me is you have to take that thesis to the end, and you have to wonder what a true cold storage custody Bitcoin will be worth 50 years from now. Because if they build this huge amusement park on the back of this escalation of value, and all of the derivatives products are by definition only able to exist because of the escalation of value, then I would argue that we would achieve the status of too big to fail. Because what happens when an entity has those characteristics and there's some calamity that causes disruption? The government steps in, or the regulating body steps in. They halt trading. They stop it from collapsing. And so, look at Bitcoin in the past. We've never had any level of sophistication in price control. None. And you can argue that's bad. You can argue that's good. That's a case for another time. But just look at the difference, is my point. You're now getting to a place where they're building an empire on the base, Bitcoin itself. If that's the case, they're going to control the price, and they will have means to control the price. And so the question, in the future will be does Chris, you said it backstage before we got on the show pretty well. The futures market tried to drive all-time high, and the spot price slapped it down and said, no, we're not ready yet. Well, will there be a day where the spot price doesn't have enough liquidity to fight the futures price, or fight the other, conglomerate of products and other liquidity pools that drive Bitcoin price, but they drive it in a different way than what we've ever used to measure the Bitcoin price? Like in the past, go back to the beginning, what do? We're heavy into on-chain analytics. We're like, how many Bitcoin are on the exchanges versus in cold storage wallet versus, and why do we do all that? Well, because we want to see if somebody's about to dump a bunch that's going to materially affect the price, right? That's why those measures are in place. Well, now we don't have to worry about that. There's a new sheriff in town. His name's Larry Fink, and he ain't going to let anything go haywire with the price, because he's seen this new city of gold that he can build. And he's seen, why is it the city of gold? Listen, it's not because he's going, Bitcoin's properties are just incredible. This is the greatest thing. Why is he convinced? Market demand. what do we just finish? We just got finished talking about the most, exciting, most, fastest growing ETF in the history of mankind. Why is that the case? Well, because you do have a lot of nuts that love Bitcoin and that want to support it at every level. And you can follow guys on crypto Twitter that right when the ETFs came out, they didn't sell any of their cold storage, but they went and supported every ETF, right? Bought every single one. Well, Larry Fink's responding to the fact that there's very few things that get people excited and that have the motives and the purity that get people to bet on the long term. And he's going, man, this is really resonating with a large group of people, and with our control mechanisms and our help and liquidity, we can make it an absolute city of gold.
Yeah, and that's regardless of what we want, right? I mean, that's it's what they want. And I know this bothers a lot of very, pure maximalists when it comes to Bitcoin. And I see why it would bother them. But the reality of it is, this is the way the system is, right? This is not just the system in the US. This is globally, this whole big financial system. And until something different happens, I really, as somebody who's looking for Bitcoin to continue to provide for, my family long while I'm gone, long after I'm gone, I want to understand Bitcoin in terms of this global financial system, because without doing that, I may get stuck doing something with it. Whereas if I had done something else, understanding it more, I may have been able to, increase protection and, provide for my, family, my legacy down the road, by 10, 100, 1,000 times. And so, when we talk about Fink having control, it's not so much that, hey, he has the Bitcoin, so he's not going to give it back, but it's more along the lines of, this is a big player. This is the cog in the world financial machine. And
you can make the case that the stack that they've put together, and again, this is not BlackRock buying Bitcoin. This is the customers that they serve buying Bitcoin, and they custody it, with Coinbase and others in the future on their behalf. You could make the case, though, that philosophically they're effectively building the base layer for the entire structure that will be derivatives that are built off of Bitcoin, right? Yeah. So if a derivatives market, whether it's mortgages, whether it's gold, whether it's all sorts of different assets, are generally 10 to 50x the actual base layer asset itself. Well, don't you want to be the guy that holds the most Bitcoin if it ends up having a sizable derivatives type of market? Of course you do, because you're the guy that gets to sit in the big chair and have everybody come and pay penance, right? Whenever you pass go, you got to pay $200. You want to be that guy. Right. So,
well, and it's an attractive mechanism to accumulate more Bitcoin, right? It's just a self-fulfilling prophecy. And I would say, based upon BlackRock's presence in the mortgage space, I think it's an inevitable that they eventually start taking Bitcoin for payment against all of those properties. They just want more Bitcoin. They want to hold as much as they possibly can, and the more popular their ETF is, the more Bitcoin they get to buy and hold. But they've seen the light. I'm with you, Andrew. I think that they've got big plans to make this big kingdom, and it's going to be a lot more valuable as a whole than Bitcoin spot price will be. Like a lot more, like exponentially more. I don't know what the multiplier is. Well, 50x.
It is not. It should not be understated. When Larry Fink is equating or doing either an indirect or a direct correlation between the size and scale of what the Bitcoin market can be and the mortgage market, you can't understate what a big deal that is, right? Because one could make the case that the mortgage market is effectively the entire underlying base layer of banking, et cetera, across the globe, right?
Well, it's the largest liquidity pool, and it moves the fastest, right? It's the easiest money to get.
Right. So him making that statement, everybody wanted to shout and scream, oh, Bitcoin's going to be as big as the mortgage market. Even though he didn't say that directly, he still was making he was conceptually talking about the two markets and where this could possibly go. That is, the derivatives associated with the mortgage market is so big that it's hard to even quantify, frankly. So if Bitcoin even begins to approach that level, 72 is nothing. It's nothing.
Yeah.
Yeah. And so, again, when we're talking about
what's the average price, real quickly, what's the average price of a home in the United States? 450K?
Something like that.
Probably
Something right around there, I think.
So if we're making a correlation between Bitcoin and the mortgage market, why wouldn't Bitcoin end up being 450K at some point? Why not?
Listen, it's in the biggest interests. Like Larry Fink wants the price to be as high as possible, with the exception of one thing. He wants stability. You can't build the derivatives market. Derivatives are a function of volatility. They add volatility to an asset that's already stable. So the question is what price? I would agree that we're going to see essentially this escalation of Bitcoin. I think that, in my mind, that's a sweet spot. I would see it settling there for a long time. I think that's based upon what you could accomplish with that large of a liquidity pool, and what Larry Fink's already said he wants to do, which is kind of the Internet of Things and smart contract. The new smart Web3. I think that short term, next 3 years. That's what my anticipation would be. Obviously, it's just a shot in the dark, but
I
think it's going to be hard for people to. I think it's going to be hard for people to rest with $1 million Bitcoin. I think that's going to be a significant milestone in terms of mentally getting over that threshold. But
what wasn't it? What's his name, Eric Van Eck, who said we were looking like maybe 3 million in 2040 or something like that?
Well, listen, all those guys have crazy numbers. Some of them say, like, worst case scenario, $13 million of Bitcoin. And listen, if that's the case, there are going to be people on the earth that are 100 trillionaires. I don't know. Maybe. That sounds like a lot. Here's the one thing I will tell you, okay? When you're in an economy, you're inflating the currency with the growth of the economy, right? That's the ideal scenario, is to give liquidity to a market that needs it for growth. And then it uses it for growth, and you're building on building on building, and that's how your GDP continues to build. And that's how people take out small business loans, why people take out second mortgages on their house to start a snow cone shop, whatever. All of those things, that is... If you look at what our system requires, it requires innovation. It requires us to be the capitalist society that we have been known to become, where we create innovative things that change the world. AI is doing that, right? So if I'm in the seat, and this may be an unpopular opinion, but if I'm in the seat of the guys who are running the printing press, and everybody, because they have been since the dawn of time, going, too much national debt, stop the printing presses, we need to pay our debt off, blah, blah, blah. That is not what I think. I think that AI, and I think the stance that we could take with crypto, is so innovative and drives the top line so much that you can absorb a tremendous amount of sins in that innovation. And what I mean by sins, printing our dollars at a rate we've never seen before. As long as you can keep up, like, for example, here's a real life example. If we could print a bunch of money to get a billion new people cell phones that use them every day, wouldn't that be a force multiplier? Like, how much economic value comes from someone using a cell phone beyond the initial purchase? Like, it changes their life, right? It forces them into the world web economy, right? So that's the type of things that we're on the cusp of with AI. And if I'm sitting in the printing seat, I don't think you can print it fast enough. I think it's going to be that transformative. And I think you're going to see the world change in ways. And we probably will be measuring Bitcoin in the price of, whatever, some crazy number that we can't even think of right now. Why do I know that? Well, because if you ask my great grandparents if they think our prices are crazy, they go, yeah, they're nuts.
Yeah.
Yeah. And so what happens on a curve? It speeds up and escalates. And so we would not only anticipate that 3 generations from now, the same response you would get from people, but not only that, but it would be a wider gap. It would have moved faster over that time period, making it even more, right? So if that's the curve that we're on, and Bitcoin holds a common denominator of 21 million, and it is going to be used then to create trillions of dollars of derivative products.
Yeah. He cut himself off. We didn't do it.
Yeah, he did. Yeah.
But no, that's a great point though, right? The fact that, and this is something I keep talking about because everybody's like, oh my God, 50% of the dollars in existence were printed in the last few years. Well, but yeah, okay. And it's a lot, yes. But as long as, we keep producing enough to pay that, it's not an issue. It becomes an issue when we can't afford that. And people want to assume from today's price point, where we're at today, that we're not going to be able to continue to do that. But my God, people have been saying that for how many decades for all this printing we've been doing?
Yeah, there have been doom and gloomers since the late 90s, right? So there's been guys that have made a career out of every year a recession is imminent. Yeah. And the only time that they've had significant downturns in the market were in 08, 09, where they, those were the 2 years where they looked like they were really smart, but they haven't changed their tune. They've been doom and gloomers ever since then. They just hit reset around the end of 2011 to maybe into 2013, saying, "Oh, we're at froth again. We're too high." A decade later, we're immeasurably higher. Listen, I was around when Harry Dent, I think, wrote a book called The Roaring 2000s. And predicted that the Dow would be at 25,000, and people thought that was insane talk. And we're at a place now where the NASDAQ is approaching those numbers, right? And the Dow has flown past those and then some. So yeah, it's the American economy is dynamic. It will have its ebbs and flows, but at the same time, the flows are generally much more longer lasting than the proverbial ebbs.
Yep, and there's a lag. Like it takes a decade to catch up. But I'll say another thing. We went from the U.S. being the greatest economy on a cost plus type of a model, where we were selling raw goods, steel. We were at the manufacturing company, right? That's not the best place to be from a sales perspective. The best place to be is from a market minus perspective. And a market minus perspective is how valuable is the tool that I own to your problem? And when you talk about AI and computers, just think about this, like how valuable is it to, if you've got 2 competing companies, one of them gets to use AI and one of them doesn't. What will this one spend to get AI? They'll spend every nickel they have. Why? Because it's survival at that stage. They go out of business. They have to shut down. So when you have something that's this disruptive, when you have the innovation and the minds of our people that can drive that through the lens of AI, I can't tell you how much money we can make by controlling that technology. And, I think even if we don't control it, we'll have a big enough piece of the pie. We'll be growing at a really, really good rate. Our GDP will be fantastic. And there's everything from like very simple things. Like imagine the computing power that Disney has put in to the evolution of their theme park from the start to the finish. Think about the data set of like, yeah, we sell more hot dogs when the hot dog stand is at this location
Yep.
versus this location. We sell more popsicles that are colored red, white, and blue versus, blue, white, and red. Like they've got they've got infinite data. It seems like it's more than we can comprehend because they've been around for so long and they've been a student of the game. They've grown with the data. They've been masters of the data, right? So imagine being able to take 100,000 years of hours of data that they had to accumulate through their business model and giving that to a computer and saying, give this model for me for my business. And the computer spits out exactly what you have to do in order to obtain the exact results that Disney did. How valuable is that to somebody who wants to place capital and put it to work? It'll be the only ticket in town. You know what I mean?
Well, that goes directly to the, I don't know when this was said, maybe 6 months ago, but somebody made the claim, and I couldn't agree more, that at some point in the more near future than the far future, there will be a $1 trillion company that, is effectively AI in like one guy. Like, it's just, it's going to happen. So, I haven't done a huge deep dive into AI, but I've kept my ear to the ground a little bit and kept my eye on it. And, we're getting to the point now where just about everything that you use, at least at my age, in my 40s, at least I've got a couple more months where I can say I'm in my 40s. And, just at your fingertips, there's a push this to readjust what you're about to say with AI. Push this to respond to this email in AI. Push this to turn the, redo this spreadsheet. Push this to turn this into a presentation. And so not only the productivity associated with it, but the level up in terms of the way that businesses handle, the pace and speed that businesses can move at, the scale that businesses can grow to without being, personnel intensive. We're right on the precipice of all of that stuff. It really is something.
Yeah, and let me interrupt y'all here real quick. Somebody mentioned this post here. Florida Chief Financial Officer Jimmy Patronis proposes the creation of a state Bitcoin stockpile for retirees. And then he's quoted as saying, Bitcoin is often called digital gold, and it could help diversify the state's portfolio and provide a secure hedge against the volatility of other major asset classes. I mean, this is something that we were talking about months ago, right? We were talking about it getting this point where you have these state systems start bringing it in there to kind of fortify their balance sheets. Especially the aging population, right?
Well, and they have to ask themselves this: it's not all the hair isn't off the dog. We've gotten rid of cold storage wallets for them. They're not going to do that. We know that. The question is, what are they going to do? Are they going to accumulate it on an exchange like Coinbase and hold it on the exchange and hold physical? Are they going to accumulate the ETFs and let Larry Fink deal with holding the Bitcoin? That'll be, and I would venture to guess they're going to go the ETF route.
Yeah.
And that's what I would do if I were them. Yeah. And it makes it simple. Keep it simple, stupid. Somebody else is watching it and doing everything for you, and you get the exposure that you want. And so we knew this was happening. We've been talking about this for years, actually, in terms of when the retirement accounts want exposure, they're going to get it because that's the biggest trading volume that exists. Like you think about the rising tide floats all ships. Most people don't think about the fact that there are mindless purchases of stock happening every second of every day in retirement accounts all over the world. Yep. And that's because it's in the system. It's integrated. Well, we're about to get there. And if we do, Katie bar the door. We don't know where it's going to go, but we do know it's going to go up. And I will tell you this, the next question and we're trying to solve it here at Arch Public, and we believe that we have, is, okay, so this group wants to buy Bitcoin, and they have identified, let's just say that they want to buy ETF. What purchasing schedule are they going to implement? And who's responsible for the purchasing schedule? And how much does that implementation of that schedule cost, right? Yeah. And is it can you trust the person? Is there third party or counterparty risk? What happens if that counterparty goes out of business? Who controls it going forward? Like, there's all of these very complex issues that they have to work through. And if you can, if we can continue to innovate like we are on making those questions easy ones to answer, then more and more liquidity will come into the pool, bigger pool.
Yeah, and the ETFs, I agree, man. ETFs are definitely where I would see them going. At the end of the day, we could say, okay, well, Bitcoin ETFs are new, sure, but ETF products are not. And
Correct.
if you're a huge corporation, if you're a huge public system, whatever, what ETFs are. You know how to use them. It's all there. It's a different thing if you try to get directly into Bitcoin, which then requires a bit more nuance, some better understanding. Of course, you got your wallet issues. You've got all this other stuff. Somebody made a joke and said CEO Ledger boating accident off coast of Florida sinks all retirement funds for state retirees. Yeah, exactly, right? But if you're doing ETFs, guess what? It's a non-issue all of a sudden, right?
Exactly.
You get exposure to the Bitcoin. And by the way, this isn't paper Bitcoin, right? Because the ETFs have to buy Bitcoin. So this is, you don't have the Bitcoin yourself, but you get exposure to actual Bitcoin through the ETF. So, yeah.
Well, let's dig in a little deeper on that. So let's say you're a big gold bug, and let's say you're a high net worth individual, and you say, I want to store gold somewhere, right? There's going to be storage fees attached to that. And then there's even nuance in whether there's segregated storage or general storage. And segregated storage means that I get to go in anytime I want and knock on the door and say, let me see my bars. And they're my bars. I can print my name on the bar. That's mine. I can take it anywhere I want. And that's mine. So that's a segregated storage that's more expensive. If you want to go into general storage, you don't even get to audit your gold. You just get to look at the big room full of gold on a picture, and they go, we're holding it for you. and here's the beauty of Bitcoin. It solves all of that. So it's actually a 2.0 of gold storage, right? Yeah. Because we can audit the wallets of BlackRock. We know exactly how much Bitcoin they're holding. We can literally get to the nitty gritty of what we want from an audit perspective in a way from afar, in a way that couldn't be done with any other asset class. That's why it's got these kind of intangible benefits to some of the legacy, asset classes like gold and silver.
Yeah, and then like Fibbo Swanee says, or you can hold it yourself. And yeah, definitely. Again, we've said that over and over again. There's likely going to be a difference in price between Bitcoin that you hold yourself and Bitcoin that you own but is custodied elsewhere, right? And so, and I think, it's great because it gives everybody the ability to do what they want in terms of Bitcoin, right? If they want the exposure without having to worry about holding it themselves, or they want the ease of the ETF without, the complexities involved in you're always sweating when you're sending Bitcoin to another wallet, right? It's always like, man, did I get it all correct in there? Because once it's gone, guess what? It's gone, But if you're more like Fibbo, if you're more like me generally, even though I sweat it, I still like to hold my own Bitcoin. I know both of y'all probably hold, some Bitcoin yourselves. But it gives us all that ability to be able to participate how we want to participate, while also everybody benefiting from the increase in the value and the increase of the operability and the increase of the derivatives products that are going to form off it, that are going to give us more opportunities in the future. Like when we think about, loans and against it and derivatives products, options and all these other things. So, it's terrible when you think about it in the way of being a Bitcoin maximalist. But once you're just outside of that, it's really a lot of potential bonus good side to it that you wouldn't get if it wasn't doing that. So
you have to have more liquidity. You want this market to be as big as possibly. How many millionaires were made on Nvidia stock? It's not just Bitcoin that has exponential potential and returns. There's lots of assets out there that have gone crazy. And here's a stupid one. If you're so against traditional finance, which assets outperformed which? Bitcoin, holding Bitcoin, or holding MicroStrategy stock.
Yeah. Yeah.
MicroStrategy, you're getting a leveraged play. And so that's the beauty. Like you said, there's a risk reward ratio calculation that goes into every one of these products, right? And when you're talking about futures, you're betting a little bit of money for a lot of reward, but the risk is great of it not happening. You have a low probability. You have a lot of risk of losing the premium. There's all sorts of things that dictate why someone would or would not want to participate. And the more options we give people, the more money comes into Bitcoin. So we need to stop looking at Bitcoin as, I only count the Bitcoin that's in cold storage wallet. No, we need to start counting the Bitcoin as the entire market. If anyone is putting $1 in a vehicle with the motivation of having exposure to Bitcoin, even if it's MicroStrategy, then that's Bitcoin. That liquidity pool is attached to the goodwill that Bitcoin has created in the world.
The banks and brokerage firms are they're basically tasked with making money in ways that people haven't thought of making money before. And what do I mean by that? What I mean by that is that, say if you're an executive at some, Fortune 500 company and 90% of your net worth is in the stock of that company, right? It's Procter and Gamble or Microsoft or whatever it happens to be. Well, what do bank and brokerages do? They can't make a ton of money off you sitting on 4 million shares of Procter and Gamble. That custodying that paper does nothing for them. But they're going to create products, straddles and collars and options and derivatives to create yield and return based on them holding that particular asset on your behalf, right? And so that same kind of thing, that's what we're talking about. I'm trying to make it easy to understand for people that listen to this show. If you hold, let's call 1,000 Bitcoin in the future, and that's the majority of your net worth, banks and brokerages are going to find a way to generate return on your and their behalf by selling you products, collared products, derivative product, options-based products that are going to give you a yield or a potential return based on the packaging they're going to put around your ownership of Bitcoin. And so that's going to happen fast. That's going to happen fast because there's going to be people that own a lot of Bitcoin that are going to be showing up and having conversations around tables at Goldman Sachs, Morgan Stanley, and UBS. That's just the facts. So 3 years from now, the conversations that they're going to be having with clients, instead of 1% of their clients having a need for those types of products, it's going to be 30% of their clients are going to have a need for those products. So those types of structured products around a position that is very concentrated, which people that own Bitcoin tend to have very concentrated positions. That's going to happen. They have to create products that will make them money, or else Bitcoin is just sitting with a person out there and they can't make any money off of it. The entire process by which we've watched traditional finance finally go from Bitcoin as a Ponzi scheme to we're now putting our arms around Bitcoin and we love it is directly related to what I'm talking about. All right, this isn't going away. It's not going away, guys. We had our annual meeting with all, we're all sitting around talking about it. So now we've gone from denying it that it'll exist, so it'll go away. It's never going away now. We got to figure out how to make money off of it. So here we are.
And I think that's a great way to really explain this whole control aspect that we keep referring to, controlling Bitcoin, right? What are we talking about? Well, people think in general that they have free will, right? Everybody thinks they're making decisions out of their own free will. But the reality of it is most of the decisions we all make today are based out of some sort of marketing or sales that have changed our thinking to a specific way, right? So we're basing our decisions a lot of times based on all, I say this in terms of products that are bought and sold, but also in terms of politics, in terms of race, in terms of religion, in terms of sex, right? We have these narratives that are sold to us and it becomes ingrained in us. And we're not really making a, for lack of a better explanation, a free will thought. we're kind of basing our opinions and our thoughts on this other thing. And so when you talk about Bitcoin, we go, okay, well, BlackRock going to control Bitcoin. What we mean is, listen, they're going to make products that most people are going to be like, yeah, I'd rather have access to those products than to store the Bitcoin myself. And in doing that, you have to then custody, right? And so you custody with BlackRock through an ETF or, through some bank that BlackRock owns. And that, goes back to Tillman's, what he's suggesting, which is likely that we're going to get to the point where, where it's going to be, encouraged, we'll say encouraged, that you
rewarded.
Rewarded for not having self-custody.
Well, there's going to be enough incentives to get you to relinquish that control and let them hold it for you in the form of yield. And that's what they're all about. And that's what all the big boys are moving towards, is Bitcoin banking. And BlackRock is in a significant head start from two vantage points. They hold more than anyone else, and they have more mortgages than any other company on the face of the earth. They own more homes in America than any other company. Okay, so just think about the implications, like of the craziness of Bitcoin maxis or anybody saying, "Oh, we don't want BlackRock." Well, why do you think anybody that's living in the home that they write their mortgage payment to BlackRock every month, do you think they're going, man, I wish I didn't have this house. I wish BlackRock had never given me the mortgage for this house. It's ludicrous. Liquidity is good. It lets us all get along with our lives and build our own little kingdoms to the degree that we can. And if you don't have the ability to have companies that can be almost like backstops for entire industries, then you are always at risk of failure. And it takes like 50 years for the market to mature to a place where we can get to a derivatives market versus 15, which is what we've done. Like this is warp speed compared to most things. You know what I mean? But it warrants being warp speed because the demand is there and the technology is warp speed. It's changing the game. It's warp speed by itself. It's one of those things. It's inevitable. And Bitcoin in every form, like my suggestion would be, is if you love the narrative of Bitcoin, number one, you should take a measured approach to it as a bigger, to zoom out and go, okay, what stage of life am I in? Like you need to contact an investment advisor, right? And get a bigger perspective. But let's just say through all of that, due diligence, you just have a splinter in your brain. I want exposure to Bitcoin. Well, there's nothing wrong with taking a diversified approach even within that decision and going, you know what, I'm going to have a little bit of micro strategies. I'm going to have a little bit of spot, and I'm going to hold it on my cold storage wallet. And some of you may be out there and you may be familiar enough with technology to go, you know what, I'm going to hold 70% in cold storage and 30% out there. And some people may be going, I'm going to hold 30% in cold storage and 70% in the ETF because they don't trust themselves as much. That's the beauty, is no one's going to force you to do anything. You can pick every combination and flavor of ice cream and permutation that you could ever imagine in terms of how you fit this into your overall strategy. The questions you need to be asking yourself are, do I have exposure to another asset inside of my financial plan that gives me the same advantage that Bitcoin does? And if the answer is no, which I can tell you, unless you find something I haven't found, the answer is no. The closest thing you can get is property, but property taxes you to own it. Yeah. And Bitcoin doesn't. And that is a massive differentiator in my estimation. So,
yeah. And then, of course, you also have, all the upkeep costs and everything else, insurance, all that other stuff.
Well, that's what I mean. It just costs tax. I'm not saying like actual government tax. I'm saying all the tax, just the cost of ownership to owning something. Even if you own a vacant lot, you have to mow it.
Or, you pay somebody to mow it, but nonetheless.
The point.
Money, right?
It's the tax. Yeah. You're either spending time, money, or both.
Yeah. And so, when we're looking at this, I know the other thing we saw here recently, I don't know if you guys caught this, was is it Bhutan, the Kingdom of Bhutan, whatever it was there. They have the $660 somewhat million worth of Bitcoin that they moved to Coinbase.
Yeah.
Y'all see that? I think I saw some
Yeah.
people kind of freaking out about that online.
It's exactly what we're talking about. They
Yeah.
don't want the burden of self-custody. That's
Isn't
crazy.
isn't the king isn't the leader of Bhutan, isn't he King Julian from the Madagascar movies? Am I remembering that
Man,
right?
you can tell the
King,
age of children hanging around Andrew by the shows
King
he
Julian?
mentions here.
The Fusa! Oh, the Fusa, King Julian.
My son used to love that show. I mean, he's 13 now, but man, when he was 4, 5 years old, man, he loved that show. He'd always get excited to come home and watch King Julian. So
Yeah, so that stuff is going to continue to happen. It's, Tillman just made a great point about, again, holding a certain asset versus Bitcoin and what do you taxes associated with that asset, taxes to own it, upkeep with that particular asset. That's the reason why these are the reasons why Bernstein can put out a 160-page, black book on Bitcoin and why you should own it. As a, supply restricted asset, which doesn't have any of those issues as your home does, has different, upside issues versus gold or versus anything that has almost unlimited supply, or certainly supply that we don't know yet. It just makes the case again and again and again for you should have exposure, and then you start having a conversation with yourself about how much exposure should I have given the power of this technology. So yeah, it's the reason why we do this show, right? It's the reason why we do this.
Exactly. And I think that, it's such a great point you brought up there. The thing I've noticed, I deal with traders and investors all day, every day, right? I've been doing this for years. Even before I started the company, I still dealt with, with people that were doing this. And the one thing that is almost common, I mean, like straight across the board, is they all come in without a plan, right?
Yeah.
So we're sitting here talking about, listen, you need to ask yourself, what am I looking to do? How am I looking to approach it? Do I have anything else comparable to this? And these are questions you need to ask yourself in order to figure out how you should be allocated and in which way you should be allocated. Maybe it doesn't make sense for you to hold spot Bitcoin. I hate to say that, but for some people it really doesn't, right? I'm a firm believer that if you're in Bitcoin, you should deal with it a bit. You should get some understanding of it, and you only get some understanding of it by using it, right? By holding it, by sending it, by paying with whatever. But maybe it's not for you, and you have to understand that, because that's going to determine how do you get involved with Bitcoin, and that's going to change. That's going to make all the difference in the world, depending on where you want to go, right? What is your end goal? What is your end point? So these things that Tillman and Andrew have been talking about here today are if you haven't really thought it out, if you haven't really had a plan, let this be your wake-up call. Sit down and get serious about it. Figure out, because with a plan, you're going to do a hell of a lot better off than you're going to do just kind of winging it as you jump in there.
Well, and I would say that there's even two paths to take. And I took a path that's kind of the path less traveled, which is the mining path. Because if you're talking about any of the derivatives products or any of the things that, we've been talking about, that's all about money. That's all about returns. That's about the price of Bitcoin. There's nothing else about it's the price. That's what those products are built for, is for you to get exposure to that price increase. When you talk about mining, you're talking about the network. You're talking about the technology. And so I encourage everyone to do a little bit of mining. And I'm going to tell you why. Because it's like studying a classic piece of literature. It's beautiful. The code, let me just tell you something. The brightest minds in the world have gotten to a point where they couldn't beat it, so they had to join it. Think about how indestructible that technology has to be. Think about the nuances of thought that had to go into the design functionality that allows it to stand the test of time 15 years later with the most powerful forces on earth trying to discredit it and disprove it. And it just keeps chugging along, not even chugging along, working exactly the way it was designed on the power law, like, a constant increase in a price appreciation. Why do I say that? Well, because miners can't make money unless the price continues to go up. That's the whole balance of the network, is that you have a party that doesn't care about anything other than the price of Bitcoin supporting its operating costs. And that's a different motive than me wanting Bitcoin to go up so I can buy, Moon Lambo. That's a very, very different business model, and it keeps everything in checks and balance. So Bitcoin has it's inevitable that the tail is going to wag the dog. I just am here to rain on everyone's parade. The money that will be associated and inflows associated to the Bitcoin derivatives products will far exceed the Bitcoin money on chain. Yeah. And that's okay. It just means that we've got really interested parties in making sure this price doesn't go down. And anything that's in an inflationary economy has to go up. So then the question becomes is, where do they want this to stand as it pertains to, and does it have the characteristics necessary to drive price in an exponential way? And, limited supply absolutely does. Being baked into every registered investment advisor's game plan when they go meet with clients is an absolute way to make that happen. I mean, I don't see anybody not trying. I can tell you that much.
Yeah.
Yeah. No, I agree completely. Again, I think the main theme here is that, listen, Bitcoin was designed, in a white paper that said a specific thing. But the reality of the world is that if you're talking about something that's going to get taken seriously financially, it's going to get pulled into the overall financial system, right? This global financial system. If your goal is, betterment for the way I like to think about it is, if your goal is the betterment of your position in life, your family's position in life, to protect and provide for your family, even once you're gone, I think it's more important about understanding where Bitcoin likely becomes a part of this system than just Bitcoin itself, right? Because I really get concerned that people, are going to be very much just Bitcoin itself, and they're so against the idea that it becomes a part of the global system. And by the way, us talking about it doesn't mean we have to be against it or for it here. We're just saying, listen, this is what's likely to happen, because this is what happens when you reach this point with some sort of financial.
Well, I will tell you this, though. The most mature traders I know come to the realization they're wrong very quickly and move on. They don't have big egos about it, and they're just willing to kind of realize that there are bigger forces in nature than them. And Elon said it best. There was some interview that he did one time, and so the interviewer, the host was saying, the host was saying, "Hey, how does it feel to be the most powerful man on earth?" And he said, "Oh God, I am far from the most powerful man on earth. Power sometimes disguises itself as money, but it's not always money. There are powers on this earth that make the rules, and they make the rules because they've tested systems through multiple lifetimes and multiple generations, and the system has worked. And Bitcoin is subject to those forces, just like we're all subject to those forces." And so, Elon went further in that interview to say something like, my wealth could be seized tomorrow, and I could be imprisoned, and I could literally have everything taken away from me. Tell me I'm the most powerful man on the earth. You see what I'm saying? Like, so we have to be realists at the end of the day. You can't, just because Bitcoin gets really, really big and lots of people bought it at less than $1 and now they're really rich and they have a really loud voice about what they think it should look like. I'm sorry to say those people aren't the same people that I'm talking about. And we'll see what the future holds. I know where my bet is, and my bet is that they're going to create. I don't think they're ever going to come out, or I think it's a low probability. I'll say this: I think it's a very low probability that they come out and go, "You can't self-custody." I don't think that's a high probability. What I do think they're going to do is make you look like an idiot for self-custody, because you're going to be leaving a lot of money on the table. They're going to be enticing. Man, you're going to be going, God, I wish I had been getting that 12% yield APY for the last 22. You know what I'm saying? Like, so it is what it is.
Yeah. I think that's, again, I agree. I don't think they're going to come out directly and say it, but again, they're going to make those incentives and those rewards so great that very few people are not going to take advantage of them. Because how do we know? Because they've done it, right? They've done it for 100 years. They know how to do it, right? They know what people want, generally speaking. And so they're just going to continue to do it.
Well, Bitcoin doesn't multiply itself, and fiat currency does. So how do yields get generated and paid? Through fiat. So if I'm capable of generating yield through printing dollars and paying that yield to control the asset, even if I don't own it, but if they own 90% of the available supply of it, and at any point they could say, yep, self-custody is not available, we're not taking any more, they could lock you out. Now, I think it's a very low probability, but the point is that they're going to accumulate and continue to accumulate the control that's needed to make this market as big as they want to make it. And we should be going, heck yeah, that's a party I want to go to. I was here first. So, they don't care that we were here first, but they appreciate, I'll tell you this, we could have Larry Fink on this show, and obviously he wouldn't do it because there's 100 other places that he would go before, 1,000 other places he would go before, but he would learn something. We could teach him something about Bitcoin, and there ain't nothing else I can say I could teach him anything about. You see what I'm saying, in the financial world. Yeah. So there is still this weird legacy knowledge base that exists in our space that they desire. They want to include us. They think, we were, leaders. And Michael Saylor has got to be in all those meetings, right? They've got to be picking his brain going, now, why'd you do this? Now, why'd you do this? And, to the degree that he wants to be included in the roundtable, which I know he does, I think he's sharing that information. Yeah. For sure.
Well, that'll do it, guys. I mean, that's an hour. Always such a great time here. Hopefully we ruffled some feathers, and hopefully those ruffled feathers will come back next week so we can ruffle them some more. Not really, but, again, guys, it's just about understanding what Bitcoin is in relation to the larger financial system, the global financial system, based historically, what is potentially going to happen to Bitcoin, or what's even likely to happen to it, right? And we do all this just to, because a lot of people don't have the kind of backgrounds or the knowledge, and it's not so that we tell you, look, this is what you have to do. It's because we tell you, here's these things, and now you need to go back and look at this and be serious about understanding what are your goals? What is your reason for having Bitcoin? Because again, as we said already, whatever your reason for having Bitcoin is going to determine how you should get involved with it. Should you self-custody? Should you be ETF? Should you just run with derivatives, as they come out? Should you do a combination of them? How much should you allocate to that as far as your wealth or your financial position goes? And that all depends on what your goals are. So, hopefully with a little bit of understanding on how the bigger financial system works there, and our thoughts on maybe where Bitcoin is headed within that, you can take some time and really think about it and position yourself better. Because I promise you, again, I said it earlier, I'll say it one more time before we go. Having a plan is going to give you a lot more likelihood of trying to get where you're going. It'll get you a lot further in a lot less time than just kind of getting out there and swinging and throwing dice.
Well, and I'm going to add to that. I think having a plan is step one. I think sharing the plan with as many people as you can share it with. No feedback is bad feedback. If you tell 100 people your plan and you get 35 of the people going, you're nuts, you probably should stop and think like, hey, my plan kind of stinks. I probably should rethink it. Like wisdom is in a multitude of people. And so when you come up with your plan, use that as a way to test your skill in coming up with a plan. Don't take pride in authorship of the plan and go, it's the greatest plan ever. No one has the greatest plan ever. And anyone who does have the greatest plan ever stumbled into it and they're just lucky for a little bit of time. Give it time and they'll fall off the horse eventually. Like it doesn't, there's no silver bullet in trading. There's no silver bullet in moving money from one asset class to the other. You're going to be wrong to some degree and you're going to be right to some degree in every decision.
Yep.
The question is are you right more than you're wrong? And is the risk worth the reward? Those are the questions you got to ask.
Exactly. Make sure you're following us, guys, on Twitter. I'm TX West Capital. Tillman, until we get his changed, is Texas OL61. And Andrew is just fine at AP_abacus if you can figure out how to spell abacus.
I've known Andrew for a long time, and I still don't know his tag, like abacus. I don't even know what that's not even related to him as a human being. And you can't remember mine. And it's a state in the 50, in the state, in the union. I mean, what are we doing?
But you know what? Both of y'all can easily remember mine, and that's what's important here, okay? So make sure you guys are following them. Tweet at them. Give them a hard time. Let them know you love them. We'll be back again next week, guys, as always. And, after next week, guess what, guys? When we come back next Wednesday, the election should be done and over. We should have somebody as president because Lord knows we probably don't have Biden as president right now anyway. It's just kind of operating on its own. But we're going to have that and maybe or maybe not have high for Bitcoin. So
let's do a giveaway on the show. We'll put up the prize pool, but we should do a little Christmas holiday giveaway for Beards and Bitcoin. Maybe a razor set, or something. No, we could do the cold storage wallets we got. The cold storage wallets from Trezor, by the way, just a little plug. They feel very they're really good. If you haven't checked them out, check them out.
Very cool.
Well, I think that's definitely something we need to talk about then. So y'all heard it here first. Hold him to it, okay? Hold Tillman to it. And that way maybe he won't be joining us from his vehicle again. All right. Listen, appreciate having you guys here as always, sharing your thoughts. Love the questions, interactions, and everything, guys. As always, hit the like, hit the thumbs up, follow, leave a comment. The algorithms love comments on there. And we'll see you next Wednesday. We're going to see how this next week goes. It's going to be crazy.
See you guys.
That's it. Take care, everybody.